Market review time, and I'm very pleased to join you from Tasmania, Australia. My name is Geoff. My surname is Pine. Hi, Helen. How are you doing? And it's good to have you on board for another week of Sunday Market Review. Of course, we do have a concurrent program running at the moment across all of technology, I guess, in an organised. What happened? I don't know what happened, Helen. In an organised event by Actions to Wealth, and therefore we probably do have a few missing participants this week in our show. However, there will be lots of talent on board and quite a few experts in their various forms, and I'll be joined very, very shortly by a couple of them. The first, of course, will be a look, as usual, at our macro view of markets around the world. And you've got to say that we've got a little bit of a change. As a result, well, I won't even say potentially. I was going to say potentially because of the Fed statement on Wednesday or overnight on Wednesday. And for most of us, overnight on Wednesday. And of course, that's shake, rattled, and rolled a few things. Interesting, and I'll bring Julian on board in a tick to have a look at those macro events. I guess that was the major one of them for the week. And the burning question now becomes, is that going to be a trend setter, or is it not? I guess, is this just a gut reaction to my mind? I've actually missed something, and as soon as Julian does come in, I'll ask him that question, because I read the statement and I've read it 2 or 3 times. Maybe I'm missing a few pars out of that statement, because I only saw 5 pars in the statement, which indicated to me that nothing really had changed. However, I must have missed the press conference, which would have said, as I've read in the headlines, that instead of having a forecast, if you like, of no rate changes or no rate hikes until 2024, the Fed has stated, apparently, I have not seen that in the statement, and I haven't listened to the nice haircut, Julian. That's not coming from me, Jules, by the way. The statement did not say that, as far as I can tell. So either I'm missing pars out of the statement, or I'm missing something from the press conference afterwards. To eliminate us on all of those things and put my mind at rest, here's Jules. G'day, mate. How you doing?
Hey Geoff, how are you doing?
Yeah, look, I'm fine. A little bit chilly here in Tassie tonight. I've got the fire raging. So other than
Wow.
that, look, everything's great. Apart from COVID things going on in Australia, as you are fully aware, and tornadoes going through Auckland. What the bloody hell's going on?
Yeah, mate. Obviously, it's the fourth horse of the apocalypse must be just about warming up, putting its bridle on and its saddle, and starting to think about who is going to be riding it down this high street. So maybe it's this dude Powell who runs the Fed. So look, you're not wrong. Actually, one of the challenges we had around the Fed was we were always talking about them possibly talking about doing some tapering. So
Yep.
within the Fed, I think they did actually admit that they were talking about it. So there clearly have been some change, and they changed the famous dot plots. So they changed their forecast for a little bit higher inflation, a little bit more growth, and I think that's what spooked the market. So the algorithms are designed to catch things like that, and they'll see, oh, dot plots have changed. Now, hang on a second. What's a dot plot? A dot plot is a forecast, right? It's a forecast of what the world should be doing. But as we well know, the economic forecasts have had such a good record the last 18 months of being able to guess what the world's going to look like, that I think even Powell probably said himself, come on, guys, let's take this with a bit of a pinch of salt. But no, the market didn't. So really, if you include the 5 basis points of tweak they did on the reverse repo, which is a technical plumbing issue to do with the US Treasury market, which got nothing really to do with any change in interest rates. It was purely a technical thing. Then really what happened is it was this change in attitude that people began to see, and then the markets all sold off. And literally it was a complete chaos, right? From the get-go, from that meeting, the market sold off. It didn't get any comfort from Powell in the press conference. And, coming on the back of, I think a extreme amount of over positioning, both in equities and in commodities and in the US dollar short. Pretty much an extreme amount of positioning everywhere. We hit correlation of 1, right? So all markets went down, including gold, including the commodity markets. Oil didn't. Oil's the standout winner. It didn't move that much, neither did dollar yen, which is definitely a sign of flight to quality. But what really was the key driver for me, Geoff, was the yield curve movement in the States. Now, for those of you who don't know about the yield curve, there's interest rates from 1 year out to 30 years in the US, and they're followed really closely. When the back end, that 5s to 30s starts to shuffle around, that's when I get interested. Okay, and what happened is that curve should always have a degree, should always have a degree of steepness. No, there, I can't do, there.
I struggle with that too.
Try to do it on telly, right? It should always have a degree of steepness pointing upwards like that, right? Because after all, if you lend money, if you lend money to somebody for 5 minutes, what interest rate will you expect rather than when you lend money to somebody for 50 years? It's going to be a little bit different. So you'd expect to have a little bit higher interest rate for that 50 years. Anyway, so look, here's the key point. Okay, the shape of that curve flattened, especially from the 5-year. Now, why is that a worry? It's a worry because when you look at that, that's a sign that maybe the bond market told the Fed, it told all the algos who decided to buy the US dollar and sell everything else, that maybe the world isn't quite as strong as it was. So what I see, and what's really interesting for me, is that yield curve flattening, because for those of you that don't know, a yield curve flattening move is a sign of a moving from an economy that's doing really, really well to an economy that's starting to slow down. So we've got a bit of a countervailing thing going on here. But if the economy was starting to slow down, then that would mean the economy would be starting to slow down everywhere, and you wouldn't need commodities, you wouldn't need gold, you wouldn't need anything but US dollars. So this is maybe all part of the same thing. So here's the key thing for me regarding all of this, right? It doesn't matter what I think. It doesn't matter what you think, Geoff, either. What really matters is what the hell happened. Our job as traders is to look at what's happened and try and make some money out of it. We're not here to sit down and pontificate about the world. That's what somebody called an analyst does. They get on CNBC and they look nice and wear a tie and have a haircut that looks amazing. Whereas us traders, on the other hand, have terrible haircuts, are unshaven. But what our job is to try and trade the price action, and that's what's going on. Okay, so we saw the sell-off. You've got to get on board with it. Now, the question is, what next? Because within this sell-off, what's going to happen? You know, where does gold get to? Oh, my God, gold was liquidated, right? Everybody's now long, still got horrible positions above 1,800 if they haven't stopped themselves out. So if we bounce a little, in all likelihood, there'll probably be more sellers. This isn't over yet. We've probably got to give this something called time, which is our great problem. So equity markets, this is a seasonally bad time for equities for the next couple of weeks or so into the end of the year. So we've got 5 or 6 days to go at that negative equity movement. So I think equities are going to struggle for the rest of the week. I think gold may struggle for the rest of the week. God knows what's going to happen to the US dollar. I'm not actually clear about what's going to happen to the US dollar. That's the equity market, right? Now look at that. Okay, shaken but not stirred, right, is how I'm going to put that. Okay, so I don't think that this is a big move. I tell you, when I start to get worried is when we take out those lows we put in place in May, right? What price is that? Can we see roughly what those May lows were?
40.57.
So I know from the record that's about 5% down, guys. So listen, right, in that area, about 5% down, what have we actually done? We've just hit the bottom of the trading range. This is still not bearish, so this is something we've got to bear in mind. The monthly chart in gold looks a bit crappy. The yearly chart in gold is not a problem. It's still a bit boring. You go and look at some of the other charts around the world and see what you think, right? This is where things get interesting. We've had such an amazing year. That's the monthly chart of gold. I don't even need to look at what that is. I know that chart off by heart, right? We're still sort of doing okay, but as I was saying to some of the listeners, I think a few days ago, this is really important, right? We shouldn't have broken down to where we are now. That's crazy. I think you've got to think that maybe gold's more of a trading range than it is a trend at the moment. But in order to break that trend and go higher now, we've got to take out, unbelievably, the high of this month. That's like 1920 or 1910, something like that, to get back on the bullish train again. Until then, the market's best case neutral, worst case, we're maybe struggling with a greater decline. Maybe this is the time when we go down to that $1,500 mark. Who knows? So look, nobody quite knows what's going on. We've got to see what unfolds over the next 2 or 3 days. Key numbers for me are the PCE number and actually anybody from the Fed saying something reasonable. Like, yeah, guys, look, we changed the dot plots, but you're getting obsessed with this when it doesn't really matter because we've got no idea what's going on either. I don't think they're going to put it like that. They maybe make it slightly more flowery language, but that's still the key thing, right? This was a one side of the boat trade where everybody had the same positions and the amount of speculative interest in the commodities was insane. So we're unwinding some of that, probably more to go. That's going to take a couple of weeks. Wait till either volatility settles or you get down to some key support areas to think about taking a contrary position. Right now, it looks like we're in the camp of looking for, if it bounces, we'll probably keep selling it until we get some kind of higher low, which is going to clearly take some time to develop. That's it for me.
Cheers, mate. I think that's very interesting. And the big question on everyone's lips, of course, who's, I guess, either part-time traders right through to professional traders, is this sustainable? And you've covered that fairly well. I have to therefore go away from that point to why do we have tornadoes in Auckland?
Well, actually, interestingly, now this is really interesting. If you really want to get into this, the weather in the southern hemisphere right now is fascinating. Okay, because I was looking at it the other day from a climate perspective. You might be a bit chilly in Tasmania, but historically you're not chilly enough. Okay, Geoff, this is the interesting thing.
True.
Okay, in Auckland, right? Seriously, in Auckland today, guys, it was 18 degrees and it's the middle of winter. What's going on? Okay, it's been hot for 2 weeks. Okay, the weather's completely screwed up. Well, what's happening is actually none of the bad systems can break out of the Antarctic. There's a little, if you like, a band of high pressure sitting around, keeping it all in there, keeping all that cold air in there. Nothing can get loose at the moment. So the roaring forties aren't really roaring that much at the moment. So here's the interesting thing. When that starts to change, we're going to get a crazy winter. I suspect it's going to be short, sharp, and horrid. So Geoff, dig out the snow chains, dig out your snowshoes. You might need it in 2 or 3 weeks' time when things change a little bit, and maybe some of those systems that haven't been able to get up to you start to hit Tasmania and the South Island of Auckland. And I think everything else is random, is crazy shit, and it's amazing. God, isn't the weather fantastic?
But you're absolutely right. And I was just thinking today, we've lit the fire a few times, but it's really not that necessary. As you say, if it's 18 degrees in Auckland, okay, it's probably, I don't know, about 13 here, I suppose, was the maximum. It leads me to the next question, which you know a little bit about, and that is, how does that affect the power market?
Very volatile at the moment because the weather systems aren't normal, so it's not raining as much. For those of you who don't know, New Zealand needs a lot of rain because 85% of our power comes from renewable energy, which is wind and hydro. So when you have settled conditions, it's not very windy, and when you have settled conditions, it doesn't rain that much. Listen, Yvonne hasn't even taken the pot plants off the fire, Geoff. All right. Off the stove. So I for the time being, it's still autumn here. Long may it continue. Hopefully we can breeze straight through winter without noticing, and it's just going to it'll stay lovely weather until things pick up again in September. I suspect otherwise. There will be no ski season anywhere if that was the case. So we're due our turn, but for the time being, we're getting lucky and we're getting away with it, and long may it continue.
Yep, we know it will come. We know it's coming, but as you say, it might be short, sharp, and SH1TTYE. We'll see. Mate, thanks so much as always. And it's a little bit sad about the conditions in Australia at the moment, but I'm sure that'll change at some stage and we'll resume normal transition when the time is right.
We will do. And
have a great rest of Sunday, mate.
Thank you, Geoff. Thank you, everybody. Thank you, everybody, for listening.
Okie dokie. There's the big picture, and the big picture to my mind is just a little bit on the what happens next side. And I can see in the questions box that everybody's thinking pretty much the same thing. Let's switch our attention from where we would normally go right now is to the fundamental side of things, which I guess in many respects is not a long way from where we were just now, talking about not tornadoes and not the weather, but what happened over the last few days in the States in particular, of course. And I would have thought Alexis would have been focusing a little bit on that as well. But we do have, as I said at the head of the show, we do have an event happening at the moment where most of our presenters are tied up. And for that reason, we are not going to see Alexis in the show tonight. And potentially we're not going to see a few